Hello, so this is the third video for the subject investment and portfolio management, and we're going to discuss the principles of investing or investment principles. So meron tayong tatlong articles dito. First one is from investopedia.com, Benjamin Graham's Timeless Investment Principles. Okay. I always get confused how to pronounce his last name, but anyway, Mr. Warren is widely considered to be one of the greatest investors of all time. But if you were to ask him whom he thinks is the greatest investor, he would probably mention one man, his teacher, Benjamin Graham. Okay. So Graham was an investor and investing mentor. He's generally considered the father of security analysis and value investing. Essentially, doing analysis or evaluation before making your investments. His ideas and methods on investing are well documented in his books, Security Analysis and The Intelligent Investor, which are two of the most famous investing texts ever written, right? So principle number one, let's go over it. Always invest with a margin of safety, okay? Margin of safety, principle of buying a security at a significant discount to its intrinsic value. So essentially, buy low, okay? Which is thought to not only provide high return opportunities but also to minimize the downside risk of an investment. So essentially, when you try to buy a security or an investment, you don't if there's if there's available market price and there's no haggling to buy at a lower price, then that's that, right? In the stock market, that's how it works. Walang haggling done. I can't offer to buy at a lower price. But in other types of investments, especially if you're buying a business or a struggling business, or if you're buying a startup business, normally investors could offer to buy at a lower valuation compared to their current market price. Okay, and in that sense, the difference between the market price and yung price na ina-offer nila to acquire the investment, yun yung tinatawag nila na margin of safety. Okay? Kasi normally, ang mga companies or mga businesses, especially struggling businesses, after the purchase is said and done, the normal situation is that yung kanilang valuation would go down. Okay? Kasi andun yung fact na magkakaroon pa ng transition, merong, overtake. There's going to be a change in the management, in the operations, and kumbaga merong doubt as to how they're going to move forward. So yung kanilang valuation usually goes down. And yung pagbaba niya na yun yung margin of safety ng investor. Okay? Kasi in a way, alam naman nila na pag nangyari yung acquisition, bababa talaga yung market price din naman nitong companies na ito. Okay? So kumbaga, they did not exactly buy at a loss kasi binili nila at a lower price or already. Okay? In simple terms, Graham's goal was to buy assets worth $1 for 50 cents. He did this very, very well. Okay? To Graham, these business assets may have been valuable because of their stable earning power or simply because of their liquid cash value. For example, it wasn't uncommon for Graham to invest in stocks where the liquid assets on the balance sheet were worth more than the total market cap of the company. Okay? This means that Graham was effectively buying businesses for nothing. While he had a number of other strategies, this was a typical investment strategy for Graham. But in a way, kapag struggling business na kasi na naghahanap ng investor, tapos you have here an investor who has the money, normally ang may, ability talaga to negotiate would be the investor. Kasi itong si business na, especially kung struggling business yan, kumbaga nagpapasave na lang acquire nyo na kami, okay? Give us something to work with, okay? So sometimes they could agree to terms na, although, on their part, hindi ganun kagandahan, but still, it would be helpful in their continuation as a business. Okay, so in this sense, investors kind of win, alright? This concept is very important for investors to note, as value investing can provide substantial profits once the market inevitably reevaluates the stock and ups its price to fair value. It also provides protection on the downside if things don't work out as planned and the business falters. The safety net of buying an underlying business for much less than it is worth was the central theme of Graham's success. When chosen carefully, Graham found that a further decline in these undervalued stocks occurred infrequently. Okay. In a way, on the part ng investor din naman, when they acquire struggling businesses, syempre merong mga changes na dapat gawin. Before they could continue their operations, kailangan pa nilang i-check, evaluate, ano ba yung problema, bakit ka struggling na business, ano yung hindi mo nagagawa ng maayos. So, in that sense, di ba, expertise ng investor yung magdadala or mag-turn over nung situation ng struggling business. So, hindi na siya masama na, na trade. Kasi kumbaga, kung hindi, sabihin na lang natin na 50% ng binigay ng investor is the monetary capital. Tapos, the other 50% is yung expertise niya on how to turn this situation around. Okay? So, hindi na masama na trade when you look at it. Okay, kasi kung hinayaan lang naman sila, baka malamang sa malamang diretso silang bankruptcy. Ito mga struggling businesses. Principle number 2 is expect volatility and profit from it. Okay, investing in stocks means dealing with volatility. Volatility means, the changes in the price or the market prices. Okay, it could go up, it could go down, and it's, it changes every day. Instead of running for the exits during times of market stress, the smart investor greets downturns as chances to find great investments. Graham illustrated this with the analogy of Mr. Market, the imaginary business partner of each and every investor. So Mr. Market offers investors a daily price quote at which he would either buy an investor out or sell his share of the business. Sometimes he will be excited about the prospects for the business and quote a high price. Other times he is depressed about the business prospects and quotes a low price. Okay? So essentially, ito yung tinatawag nila na, buy low, sell high. Which is not exactly wrong. When you're planning to buy a security, especially a share of stock, syempre bibili ka nga naman kapag mababa yung price para kapag tumaas yung price, saka mo siya bebenta, and that's how you profit. Alright? But again, it does not, siguro there are certain investors na not very knowledgeable. They do buy at any stage of the volatility of the price of the market. So, pero later, i-discuss natin din yan. We'll take a deeper look into that. Alright? Kasi hindi naman siya yung simpleng buy low, sell high lang. And hindi naman siya applicable to all. Okay? Tapos, ano pa ba yung isang babanggitin ko dapat? Ayan. Essentially, yung mga current platforms na meron tayo ngayon, which allows individuals to do stock trading. Yung mga banks, normally meron silang own platforms that allows their clients to do stock trading. BPI, they have BPI Trade. BDO, they have BDO Nomura. Metrobank, I think they also have, I just forgot what they're called, COL, Financial, meron din. And then, etong Investograms, I think they also have their own platforms, na ginagamit din, pwedeng gamitin. But, yung gagamitin natin for, for your experience lang, meron din dong features na same lang nung ginagamit sa actual na stock trading. So, makikita nyo doon. Etong isa, pwede ka kasing mag-set doon. Meron siyang, I think, feature sa settings wherein you can set a price. Kasi hindi, kunwari, kung busy ka rin naman na tao, investor, may sarili kang, may sarili ka pang buhay, nagtatrabaho ka or nag-aaral ka. So, you can't always, watch the market, right? Pero pwede ka maglagay doon ng settings, kunwari, itong company na to, papabantayan mo dun kasi software naman na itong mga applications, right? Kapag na-reach niya yung particular price, let's say, pwede mo siyang iset na mag-auto buy ng shares, okay? Tapos kapag na-reach niya yung certain price ulit na high naman, mag-auto sell yung iyong investment portfolio, okay? Dito sa baba, yung kapag pababa ng pababa yung amount. On the other hand kasi di ba buy and sell tayo. Kunwari meron ka ng existing stocks, tapos di ba meron siyang price. Kapag meron siyang na-breach, ikaw yung magsiset ng price hanggang kailan ka magka-cut loss. Okay? Kunwari, bumaba yung price ng investments. Pero magsiset ka ng, price na kaya mong kumbaga kaya mong i-absorb yung loss. Tapos beyond that, ayaw mo nang ituloy. So, pag na-breach yung price na sinet mo, automatic isa-sell na yung shares mo. Okay? So, and that's how you cut your losses. Kasi kung hindi ka magsiset ng ganun, tapos napabayaan mo, hindi mo napansin, dire-diretsyong bumaba pala yung price, di ba, mas malaki yung magiging loss mo kapag ganun. So, minsan merong mga ganyang features yung mga trading platforms ng iba't ibang financial institutions. Okay? And later, makikita rin naman natin yan. Okay? So, ayan. Because the stock market has these same emotions, the lesson here is that you shouldn't let Mr. Market's views dictate your own emotions, or worse, lead you in your investment decisions. Okay, so sometimes ngayon, let the numbers speak for themselves. Instead, you should form your own estimates of the business value based on a sound and rational examination of the facts. Furthermore, you should only buy when the price offered makes sense, and sell when the price becomes too high. Put another way, the market will fluctuate, sometimes wildly, so biglang taas, biglang baba. But rather than fearing volatility, use it to your advantage to get bargains in the market or to sell out when your holdings become way overvalued. Okay, if napansin nyo, I'm not sure if you've been watching pala the stock market. Nitong mga nakaraang months, di ba? Whenever the NADA would recommend the opening of the economy, yung performance ng stock market tumataas din. Okay? Pero every time na magkakaroon ng lockdown, especially sa NCR, bumabagsak yung stock market or yung prices ng mga companies. Okay? Kasi of course, it's another, hindrance in their operations, ganyan. So, ayun. So, pag minsan, di ba, kaya in a way, meron ding mga, rumors na lumalabas na, uy, may MECQ daw, or, uy, mag-ECQ na naman daw sa NCR, ganyan. Although, di ba, hindi pa siya officially announced, pero kapag may rumors ng ganon, affected na agad yung performance sa stock market. Okay? Kasi alam nila kapag natuloy yun, or nagkatotoo, babagsak yung mga prices na naman. So, some of them would, sell na agad before pa bumaba yung prices ulit. Okay? If that price is, of course, higher than their cost. Okay? Or if they just wanted to cut their losses early on. Okay? Ano pa? Ayan. Two strategies that Graham suggested to help mitigate the negative effects of market volatility. So you have your dollar cost averaging. Buying equal dollar amounts of investment at regular intervals. So, ito parang regular investment. Let's say, every month, bibili ka or maglalagay ka ng 1,000 pesos dun sa particular type of investment na yun. Okay. Dollar cost averaging is ideal for passive investors. Yung tipong hindi mo siya kayang i-monitor. Pero long term naman, wala kang balak na gamitin in the near term yung pera na nilalagay mo doon. Right? Investing in stocks and bonds, this is already a way of, creating a portfolio. Yung tinatawag natin na portfolio in investment, ibig sabihin, yung pera mo, hindi mo lang siya ilalagay sa isang type of investment. You choose a variety of, different types of investment. So you have your bonds, you have your stocks, meron ka ding real estate probably, or you also invest in, businesses, ganyan. So, ayan, portfolio, ang tawag doon. Graham recommended distributing one's portfolio evenly between stocks and bonds as a way to preserve capital in market downturns, while still achieving growth of capital through bond income. Okay? Philosophy ni Graham, preserve capital, then try to make it grow. He suggested having 25 to 75% of your investments in bonds kasi much safer ang bonds, and varying this based on market conditions. Kapag maganda performance ng economy and performance din ng companies, then you might want to increase your investment, lean towards the stock market. Pero kung hindi maganda yung performance ng stock market, edi transfer mo muna into bonds. Okay? This strategy had the added advantage of keeping investors from boredom kasi gumagalaw lagi. And they, of course, they monitor their performance of the investments, which leads to the temptation to participate in unprofitable trading or speculating. Okay? Yung ibang tao kasi, di ba long term nga yung stock trading normally, okay? Unless they engage in day trading, okay? Pero kapag hindi kasi nila natripan yon ng isang investor, yun, andun nga yung temptation to participate in unprofitable trading or speculation, okay? If you notice, di ba, ginawa ko ulit yung video about the 2008 financial crisis, because when you think about it, yung housing bubble, it's a speculation in a way. Tapos hanggang sa lumobo na lang ng lumobo yung prices ng mga bahay. And later on, magiging blueprint natin yung 2008 financial crisis. And in assessing or in analyzing different types of investments na meron tayo ngayon. Okay? Principle number 3, know what kind of investor you are. So, meron na tayong tinatawag na risk assessment para malaman mo kung ikaw ba ay conservative, moderate, or aggressive. Okay. Tapos, pagdating dito sa active or passive investors, normally kapag aggressive investor ka, more active ka. Okay. Unlike dun sa mga conservative and moderates, more on, passive. Kasi yung pera naman nila, nilalagay nila majority into bonds. Okay. And yung bonds, you don't need to monitor it very much, okay? Enterprising investors, yung active, and then of course, defensive investors, yung passive. Itong passive investors, all they wanted is to make sure na hindi magne-negative yung value ng kanilang investment, okay? Okay lang na maliit yung kita, basta less yung probability na maging losses, okay? First choice, to make a serious commitment in time and energy to become a good investor who equates the quality and amount of hands-on research with the expected return. If this isn't your cup of tea, then be content to get a passive, possibly lower return, but with much less time and work. Okay, so yun lang naman yun. Kapag passive ka, less work, of course, if you don't have the time to manage and monitor the portfolio performance. So, maging passive investor ka na lang. Okay? Kumbaga, walang masyadong ginagawa or ginagalaw dun sa investment. And the dogs are barking. And the fallacy that many people buy into, according to Graham, is that if it's so easy to get an average return with little or no work through indexing, then just a little more work should yield a slightly higher return. The reality is that most people who try this end up doing much worse than average. Okay? Pag andyan na yung index, ang tawag dito, siguro, if we're going to find another term for indexing, ito yung pinakang benchmark, or yung average performance of all the companies in a particular industry. Yun yung tinatawag natin na index, okay? And if a company is performing near the index or better than the index, ibig sabihin, maganda yung performance ng company, okay? So, in a way, that's one way of choosing which companies to put your money into, okay? Kapag yung kanilang performance is better than the average or the index, right? In modern times, the defensive investor would be an investor in index funds, okay? Kasi wala siyang time to do his own research, so nakabase na lang siya dun sa provided index funds, okay? Both stocks and bonds, right? Speculator versus investor. Ayan, nabanggit na natin kanina yung speculations. Ayan. So, ayan lang. Pero ito yung kay Graham. Graham's timeless investment principles. Alright. There are 2 more articles. Pero sige, paghihiwalayin ko na lang since medyo mahaba na tong video na to. Thanks and bye.